For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Okay, traders, Stacey Burke from Stacey Burke Trading. Today we're talking about explosive 3-day setups. Today we're going to go over the day count. We'll review the instruments and just see how that day count played out and address a couple of questions and comments. A few traders still struggling with the day count and also not understanding the front side, back side, and still getting chopped up on the inside. So just to review, coming in looking for that, for me, New York session. If you're trading Asia or London, then obviously the same opportunities apply, but you have to understand the template that you're trading for that session. And we'll look at a couple of examples, but we'll primarily focus on the larger 3-day setup. Timing, you can review that. You can go back. There's hundreds of videos that talk specifically about the timing, but again, just if you have a pen handy, write this down. 8 to 11 p.m. for the Asian session, 2 to 5 a.m. for the Europe-London window, and 8 to 11 a.m. for the New York window. Now again, there are other opportunities at other specific times. We're talking generally about the larger explosive patterns. So you can, test whatever else you want. We'll talk about other timing opportunities. I've reviewed this previously in 915 videos. Those are all, you can trade as much as you want. You can take as many trades as you want. You can trade, I know traders that want to trade every session. But when you understand that you can scale certain setups, then you only need to be taking, a trade or two a day, if that. Because obviously once you identify the larger setups, the scalability, it's about the quality of the setup over the quantity of setups. It's not about how many pips you get. It's about the quality of that setup that you can scale into. A 25 pip move could be a larger, profitable, scalable trade setup in certain instances than possibly a 100 pip move that you sit into for 4 or 5 hours. So again, focusing at the high and low of the day, the price levels, major round numbers, 50s, double zeros, quarters for trapping volume. Then understanding what your best setups are, those templates. We keep reviewing that over and over again. And the 3-day count. The 3-day count. So we're going to talk about that today, the 3-day setups, and understanding how to identify those setups. Because those 3-day setups are where you're going to get very large, explosive opportunities that again are potentially third level and not going to come back. You can hold on to very, very lucrative opportunities. And for simplicity, we're going to refer to a 3-day setup as the third time a market breaks a daily high or low. So the third touch to a daily high or low will be our day 3. Day 3 longs in the market, day 3 shorts in the market. I repeat, the third break of a daily high or low. So we're not going to go over session trades. What we're going to do is focus on this daily high or low. And again, we've talked about the indicator. I use an indicator that I cannot unlock and share. Otherwise, I would gladly share it. But you can simply just mark off those levels manually. So we'll just run through the instruments because it's the point I want to emphasize is that the different templates that the market will lull you into to trick you. We talked about initial balance. The initial balance is Monday, Tuesday. 80% of the time we'll establish one of the ranges. Now, day 1, we have a market that's triggered triggered the low of Friday on the Canadian dollar. We'll just run through the different examples. On day 2, Tuesday, we have a market that puts a peak formation low in place. Day 2, so Monday, Tuesday puts our high and low in place. When we get to day 3, so we have Monday's triggered just ever so slightly. We've triggered Friday's stop. So coming back to that, we have traders that are possibly long on Friday in the U.S. session. They've traded back down through that and hit stops at the low of Friday on Monday. This is our inside reversal day on Monday. And then they've triggered the low of Monday on day 2. So we have day 2 shorts in the market, and they've reversed that and gone back up with our 3 peaks pattern and put a high in place. We get to Wednesday and we have an inside bar. Now again, you can go back and review these because I want you to understand that how each session's opportunities present, but this is about the 3-day setups. So we have our day 2 shorts in the market, and then they come up and put a high in place on day 2, and Tuesday's high sets up for a day 1, day 2, day 3, meaning that this high has not been taken out, but they push up in 3 pushes, 3 levels of rise, right? 3 pushes, 3 days for the move back down to the low on day 3, triggering the low of the week. That's our 3rd touch to the low of the week for a reversal trade in the New York session back up to the high of our new lower high of the week. Now, traders may find this confusing, but we have a 3-day setup. We have a 3-day setup, day 1, day 2, day 3 for our gap in the Europe, London, Asia, London window for shorts. We have a reversal opportunity on Thursday for our 3rd touch to the low of the week, which again is an explosive reversal. And then we have our 3 levels high of day trade setup on the Friday. This template, which we reviewed in our last video, this is a setup. So for traders who are struggling, you need to understand they're not going to lay out a silver platter for you and just make it a simple stair-step pattern. I keep redrawing this pattern. We have our day 1, day 2, day 3 for our large move, possibly down. And the same thing can apply in the other direction, day 1, day 2, day 3 for a large move back up. Now, most traders think that because we do a 3-day count, it has to be a Monday, Tuesday, Wednesday. And this is where you get trapped and triggered and caught in, there was no 3-day setup, or there wasn't this, or there wasn't that. I want a daily level broken for my day 1. I don't care if it does this. The next time it breaks, that's day 2. And the next time it breaks, that's day 3. And I'm looking for a setup on that day, or then we could have a first red day on day 3. So understand that we could have a first red day, which is our day that puts a peak in first on day 3. And some traders may get 25 or 50 pips. But our next day may be our 3 peaks pattern for the big, large red day setup. So when you understand the day count, sometimes you're going to see these different variations. But again, we're working from the extremes. We're counting the days. So coming back to just looking at our previous day's highs and lows. Day 1 low is triggered. A day 2 low is triggered. No other highs or lows are triggered until we get to the Thursday. Day 3, we have a low of the day triggered and a low of the week triggered. Which is our Thursday. And that sets up for an explosive reversal trade and a template. 3 peaks. High of the day. High of the week. This is our new lower high of the week on a 4th day for a large, scalable, explosive move. So day 1, day 2, day 3 to the low. They go vertical back to the new lower high of the week, which was made on our Tuesday. Our initial bounce. This becomes our new lower high of the week, which was respected on the Tuesday, Wednesday, Thursday. Before going back down, the explosive pump. This is a pump and dump template. Day 1, day 2, day 3 to the low. Explosive reversal, high of the week for the U.S. session. 3 levels of rise. Reversal, scalable, move all the way back down. I talk about grouping the Swiss franc, Canadian, and the yen into one group and then looking for the best setup on the day in that template if I'm going to choose one of those. So again, the same principles apply. We have our day 1 on Monday breaking Friday's low on the Swiss franc. Day 2 on Tuesday breaking the low of Monday. So we have day 1, day 2. So again, if you're trading in these sessions, this is where you can develop your thesis either for a reversal or a continuation trade, or both, if you're trading both. And our day 3 reverses on the inside. We talked about this last week, the trap quarter of volume, the reversal, the inside reversal trend trade day 3. We break Wednesday's high on Thursday. We trigger the high. Again, this is not a breakout. This is a trigger of the high. We come back down. We don't have a break of a low of the day, but we get the same template, the 3 peak rise to the high of the week on our Friday. So again, coming back to our thesis, we have day 1 breaking Tuesday's high. We have day 2, even though so subtle, we have our day 2. We have day 1 longs. Day 2 becomes an inside, somewhat of an inside bar, but we break the high. And of course, our day 3, 3 levels of rise, they break out. And there is our 3 peaks pattern. Peak 1, peak 2, and peak 3 for the reversal pump and dump, high of the week, high of the day, 3 levels of rise, 5-star scalable trade setup. Now, Japanese yen, obviously we talked about the wicks. We have a market that's been trending strongly, the Japanese yen. We have our day 1 on Monday, breaking the high, day 2 on Tuesday, breaking the high, and we have day 3 continuing that move. So obviously we're in a market we talked about. I wasn't even interested in trading this because of the wicks that obviously could have been Bank of Japan or whoever manipulating this, and just dangerous to trade. But we still follow the same process in terms of identifying this. When we get the break of a daily low, we can start our count again if we're in a blown out market. So we start our count again. We have our day 1 on the Wednesday, day 1 on Wednesday, day 2 on Thursday, day 3 on Friday, and our 3 levels of rise. New York session, massive reversal all the way back down. And again, coming back to, we talked about this in the last day's video, understanding the templates on the day, 3 levels of rise, a high of day opportunity, the front side and the back side, the pattern and the timing of the trend, and the massive move back down. So, not saying this was safe to trade, but the process still applies. British pound, we on Monday break out of Friday and the previous week's high before putting peak formations in, but we have our day 1 on Monday. Then the market makes an inside bar. We break down on Wednesday. We'll zoom in here. We break down on Wednesday. We start our count again. Day 1. Day 1 on Wednesday, the market is going down. Day 2 on Thursday. Market pulls back inside with a high of the day sell opportunity, continues down on the Friday. Day 3 in the London session, day 3 down. And into the US Open, takes out the low of the London session for an explosive reversal in the US session. So day 1, day 2, day 3, massive reversal, explosive short squeeze. Day 1, day 2, day 3, the third day a daily low is broken. So you can see again, they go up first, trigger the high of the week, put the high in place. Day 2, Monday, Tuesday, 80% of the time will establish one of the extremes. The lower peak formation high becomes our new lower high of the week. Wednesday puts in a peak formation high. Thursday puts in a peak formation high before triggering the third low, break of a daily low on Friday for the explosive short squeeze back up. In the euro, we have day 1 on Monday breaking Friday and the previous high of the week. Day 2 on Tuesday breaking the high of Monday, day 2. We're looking for our day 3, and we don't get that. The market breaks down on the Wednesday, so again, Monday, Tuesday, we potentially now may have a high of the week in place, and the low of Tuesday is broken. Start our count again. Day 1. Day 2 on Thursday, they trigger Wednesday's low. Lower high. Day 3, Friday breaks not only the low of Thursday, but also the low of Monday. Day 3 daily low, weekly low broken into the beginning of the 12 candle window. So again, when you understand the timing, 30 to 45 minutes establishes the low, and then the explosive short squeeze back up to our lower high of the London session, which again we talked about, understanding range expansions, short squeeze, 2 full expansions of that range. Somebody asked me a question, can you explain that more? It's just a 100% high-low range expansion. That's it. Whatever the distance is, 100% expansion, 200% expansion of that high-low range. That's the measured move, asymmetrical opportunity. And then understanding that this whole thing, as I repeat, which traders hate when I say this, that you're in a box. There's the high and there's the low. They went up and made the high of the box. They made a low on the day 1. They went up and made a high of the box. They work the high. They break it down and go back down to the low of the box for the explosive short squeeze back up. So again, looking just at the numbers, okay, we can establish that this box technically is a 100 pip box. They go 25 pips outside of that box. They go back down to the low of the box for the explosive move back up to the lower high. Day 1, day 2, day 3 to the low, 3 days down, explosive short squeeze. Again, you can go back and review these on your own. Aussie dollar, day 1, we break the high of Monday on day 2, or Tuesday, before the market reverses. We trigger Tuesday's low, day 1 down, day 2 down on the Thursday, and day 3 down on the Friday for the explosive short squeeze. Previous day's low of the week to the high of the week trade opportunity. So for people who are going to get back on this hindsight train, I'm gonna just repeat this. You actually don't know what you're doing. You don't have setups because you keep saying it looks good in hindsight. But if you understand the timing, if you understand the nature of the template, then you understand when you go into a session the opportunity that is there on that day in that session for that template. And you also understand the bigger 3-day explosive scalable trade opportunity. West Texas, spot crude, very similar. Again, you can go through these, and sometimes you may not get that. You may not get that setup. So I repeat, I'm looking for the best setup. I'm not looking to trade every move in an instrument. We have day 1 down on Monday, day 2 down on Tuesday. We don't get our day 3 break of a low, but we get our short squeeze, which we talked about, and the reversal on the Wednesday that explodes back through the high of the week. The high of the week on our Thursday, our day 4, and we get our 3 peak opportunity on Thursday for the high of the day, the high of the week US session, 3 levels of rise, explosive trade reversal. So again, coming back and looking at how the templates unfold, day 1, day 2, day 3, inside bar, short squeeze, reversal back up to the high of the week, and on the high of the week, we get our 3 peak opportunity, 3 sessions, Asia, London, New York, high of the week, high of the day, scalable trade setup for a very huge move back down. On Friday, we get our daily low broken in the London session, the break back up inside, break in structure in the US window, the break in structure back in our US window to the lower peak formation high. This becomes our new US session high. So again, understanding the 3 session setup, US, Asia's inside, London peak formation low, peak formation high, US, peak formation high, peak formation low. If you were trading oil on Friday, the explosive New York Open trade back to the high, which we took, and then the high of the day opportunity later in the US session for a scalp back down into New York Open longs. Gold, I mentioned this again, oil gold indexes and the Euro Pound Aussie New Zealand. I tend to look at the overall templates because they will be very similar even though subtly different. So day 1, we don't break any daily levels, but we take out the US session high. So no daily levels broken, coming back to our 1, 2, 3. On Wednesday, we break Tuesday's low. There's our day 1. Thursday, we break Wednesday's low, day 2. Friday, we break Thursday's low, our day 3. And I talked about taking the short squeeze, day 3, 1, 2, 3 down, short squeeze, and then a 3 push, 3 session reversal short squeeze in the US session, the continuation to add positions in the New York Open, 3 peaks to the low, 1, 2, and 3, and this dump into the open of the 12 candle window after the break-in structure is our V bottom reversal. So again, V bottom reversal, timing window, 3 session setup, 3-day setup, day 1, day 2, day 3, explosive, scalable reversal, DNC, do not counter trend these moves. Now, S&P, again, you've heard me say, just get off the gobbledygook and all this other garbage and start focusing on setups, because all the other stuff will confuse you. It will add information analysis paralysis, and again come back to that's all not really focusing on specific setups that are scalable. We break out on our Monday. Monday comes inside of Friday right up to the Thursday high that they reverse off of from the previous week. Day 1 is Monday, day 2 Wednesday. So Monday, Tuesday, Wednesday, we've only broken Monday's high. It's a reversal on Wednesday. We have our day 1 down, day 1 down, day 2 down at the close of Thursday's session. Day 3 down on Friday, back down to the breakout of Monday's US session longs, and a lower high, so 3 peaks getting you to short it right into the low of the week for the explosive reversal trade over 1,000 pips from low to high on Friday, our third break of a daily low. It's as simple as that. All this, you keep hammering home. Get rid of the gobbledygook. Focus on simplicity. Third break of a daily low. Day 1, day 2, day 3. explosive short squeeze, 3 peak. Dump it into the open, short squeeze, explosive, 1,000 pip reversal trade opportunity.